Hey, I know I finished, but I just gotta do a few more things. In Chapter 6, they talk about bonds and amortization. In intermediate, you cover that a whole lot. You might have forgotten how to amortize a bond. Basically, when you got a bond, uh, the issuer issues a bond, so the seller sells a bond. Pretend that the parent corporation is selling a bond. And then someone in the market, in the mysterious market, purchases this bond. And so over time, payments are going to be made. Uh, a bond consists of a few things. It consists of face value. Consider this the face value. Shoot, no. Consider this 1 million is the face value of the bond on page 250 to 256. There's an example bond, and this is just an amortization table about it. $1 million was the face value of the bond, and it had an interest of 9%. That would mean that each payment, every year, there's going to be a $90,000 payment. Just take 0.09 times a million, you get that. Easy. Okay. Over here, they didn't sell it at the face value. They sold it at a discount because it's less than the face value. Discounted. They discounted the bond. It was sold for less. The discount was, well, they sold it at, that's what they say. They say they sold it at $938,555 with an effective interest rate of 1%. And so just take 1% of that value, that sale price, and you get the kind of a theoretical payment. Okay, so you have $90,000 payment bond sold at, and this looks a lot like a transfer fish, by the way. This happened in '09, and the date's very important in bonds. O company sold a bond, a million, at a value of 938. There's a difference, there's a discrepancy of, which would make 3,855. Take this number, 93,855 minus 90,000 over here, and you are left with 3,855. That amount needs to get added to the sale price, because on the market person's books, they sold it at that. Okay, I mean, they bought it at that. The sale price was that. And over time, when the bond expires finally, and it's the end, the bond is going to be, the market, the people who purchase the bond, are going to hand back the bond to the original seller. And the original seller is going to give them the face value. The face value is the eventual amount that the bond will be worth at the end. Okay, so we got over that. And so over time, you need, here's what's on their books now, and over time you need to just keep adding that, the difference between the effective payment, the virtual payment, and what the real payment is. Because over time, they're really only paying out $90,000, the original seller. Because when you have a bond, over time, it's just sold. This is such complete rambling. I don't know why I bothered doing this, but here's how I write it. Here's how I track the bond. Virtual payment minus the real payment. Theoretical, I should say. Theoretical payment versus the real payment. And that creates a difference, and then you add that, and that's how you amortize the bond. That's how you track it, really. Because you're not killing it. You're not killing the bond. You're actually making the bond bigger. So, yeah. Eventually, it just keeps going on. You keep going on. Put the dates down here. At is very versatile because it means you sold it at that, or it means point in time. Isn't that an amazing preposition? Yeah, I love it. It's very cool. Ending balances are in this column here. Interest expense adjustment. You actually have to make journal entries. I didn't scan in any And I'm not going to look through my notes to find them, but you'd probably have to make a... Oh, I should really do that. Let me recall it from memory. Maybe I can flip through my book. I'm drawing a complete blank here. And I don't want to cut anything out. Oh, sweet. It's like it's wide open here. Okay. Okay, so there's a B entry, journal entry, which eliminates bonds, because you need to eliminate the bonds. And bonds payable would be debited for 951. This is happening on, well, it's in your book. Yeah, page 252. Just look at that. Very cool, very fun. And you get that figure that interest income is 90,000 minus, let me double check this. Take the real payment minus the little bit of flavor. Shoot, this is 11. In year 11, 4665. 85335. No, the one before it. I wanted to do this so quick that I would have like... Yeah, that's it. So the one before it. Because beginning of 11. What is that journal entry? December 11. Well, anyway, you pretty much get it. This what you draw here is how you figure out what's on page 252. Yeah, not too much that I want to say about that. It was kind of dicey. I have better notes. Not going to show them. Maybe I'll show them. I don't know. All right, I said notes, note bonanza, and I meant it. Here we have more notes. We're jumping to chapter 14 and 15, and this is mostly for my sake. It's not really going to help anyone else, just given the way everything's set up. I put stuff in chapter 6 dealing with bonds. With chapter 14 and 15, that doesn't make sense. It's not very helpful, but I'm doing it for my sake. Sorry. Maybe you can glean something from this, but in chapter 14 and 15, here's my notation. I actually outlined kind of a manifest of my notation. And I'm not going to read everything. I just want to show it so I remember it, and I'll point off the key features. Oh, I got rid of this. I don't do that when I'm entering a partnership. It's just not necessary. The guy's buying into it, or he's ejecting. He's getting out of that partnership. Yeah, cool. And I draw tables like this. So here's the original members, here's their share, profit, loss, and here's their beginning balances, and so on and so forth. Zhao is the coolest figure ever. I'm waffling between using C to mean capital and C superscript Zhao meaning the payment, because it's more believable. It's closer to home if you just write down payment, the word, and this is payment. Yeah, so that's bad notation. I don't like that, or that. If I could rewrite this page, I'd write just PMT for payment, and that's and maybe superscript a Zhao symbol in there, just so you know it's the payment of the event, not some miscellaneous thing dealing with a bond or something like that. There's no confusing examples here, but in real life, maybe that'll happen. I means after event or resulting. It's a superscript, so just put an I, and that's what happens, what your balances are after the thing. Great. Here's the other part of that page. It looks amazing. The page that I drew up, it's just amazing. I wish I could swim in those characters, just the way it's laid out. Hopefully you can see it in this YouTube video, but it's very cool. And yeah, I don't think you can learn from this. This is mostly for my sake. My bad, sorry. Here this you could maybe learn from. It's 15-15, problem 15 from chapter 15. And here's how you lay it out. You write down a table and you put cash here, land and buildings, I would assume. Then maybe you'd put liabilities there. And this one doesn't have liabilities in it. The problem number 15 doesn't have liabilities in it. And then do these little hash check. Sorry, the problem only goes up to here. It's a pretty short problem, but check, and put down your partnership balances over here. So you have assets and all of that stuff, and you have the eventually you have just the liabilities over here. Basically, once you clear liabilities from here, the partnership is liabilities. So look at what we got. We got assets minus liabilities equals zero. I mean, these equal each other, is the way that you would say it. So, very cool. 85 plus 10 equals 25 plus 28 plus 20 plus 22. 22. Great, cool. Here's the symbol for each partner, and here you got the profit and loss share. I'm running out of time. Here you got, here's balances, and I put a little star for original. That means original. And then we have kind of an event that is happening. Wow. Expenses. We have 5 expenses. Oh gosh. I did this problem poorly. Shoot. What? This is BS. I don't... Oh, yeah. You have 5 expenses. Okay, that could have its own line. But whatever. And you sell the land and the building for 0. So you sell that, and you gain pretty much nothing. No additional cash comes from the land and the stuff. So you just incur 5 expense, and you pretty much have a loss of a phenomenal loss. So you have to distribute this loss. It's $90,000. You have the expense payment, which wasn't recorded as a liability. It's like, an income and outcome revenue and expense type of thing. So it doesn't deal with the balance. So you have to introduce it as a loss to the partners. So so divvy up that loss and just add together the loss from selling the land and the business and the loss, the expense, and that comes to 90. Divvy that up, distribute that amongst the partnership, and that would be 90,000, write that there, times 0.3, and that's 27. 90,000 times 0.3, and that's 27 again, 90, and so on and so forth. 90,000 times 0.2, and that's 18. Then you do balance. So the way these things go is it's balance, things happen, could be 2 lines, 3 lines, things happen, then you do balance again, and you just do 10 minus 5 equals 5. 85 minus 85 equals, well, that cleared it out. So we just put a little hash mark. Then we do the math here, and we have a -2, we have a 1, we have a 2, we have a 4. Great, very fun. Now, JH is just like my symbol for when you have you have a partner who has gone negative. Okay? That's bad. You have to JH to get them back up north to a 0 balance, kind of like this, kind of find balance, equilibrium, reach that equilibrium. So the JH entry would be add 2 to his account, his negative account, and distribute that as if it were a loss to all the other partners. So 2 times 0.3 divided by 3, 4, 5, 6, 7. Write that stuff over here, and it's pretty cool. See what I'm doing? This guy, forget about his 0.3, but add 3, 2, and 2. Oh, I'm out of time, and that makes 7. Divide that by 3 for that figure. So 3 times 7, 3 divided by 7 times 2 equals 0.85. 2 divided by 7 times 2 equals 0.5714. And 2 times 2 divided by 7, I did that in the opposite order, but that still equals 1.14. Great. Great. So then balance, draw balance here. I didn't seem to finish this problem. And you have 0, or clear, do a hash mark. And then so on and so forth. And those are the ending balances. And those are the safe payments that you can get out of here. I'm done. This is my last thing.